Hello everyone. Today we'll be discussing about hedge funds. Hedge funds is another option, another investment avenue which is quietly different from or which is quite opposite from the mutual funds. Before we discuss what are the operations of hedge funds, let us understand the meaning of word hedge. Hedge is an investment to reduce the risk of adverse price movement in an asset. Just to give an example, for example, think that in your area there is a chance of having flood, and flood is a risk which cannot be avoided. You cannot avoid this risk, but to overcome from the risk or to reduce the impact of that risk, there can be another option you can think about is flood insurance. So it is hedging against the risk. So hedge is an investment to reduce the risk of adverse price movement that is related to flood, what we discussed in that example. But in terms of investment, when we are discussing, it is related to the adverse price movement. Think that there is a risk of adverse price movement. So against that, what can be the investment you're going to do? That is known as hedge. Normally, hedge consists of taking an offsetting position in the related security. This is like offsetting, but when you're investing in hedge funds, there will be a lot of risk included in the hedge funds, and you are trying to manage that risk. At the same time, you're facing that risk, expecting higher amount of returns. So let us discuss about hedge funds. What is hedge funds? Hedge funds are usually set up as limited liability partnership or company. So here the private investors who are uh, going to think about hedge funds, and the general public will not be ready to take this kind of a investment. So here hedge funds are not meant for retail investors, or it is not meant for general public. Why? Because there are a few high net worth individuals and the institutional investors who are investing large sum of money in the hedge funds. Here, what happens is the number of individuals are less because it requires large sum of money which you need to invest under hedge funds. And it is not like mutual funds where number of investors who don't have the uh, clear cut idea about investment, they cannot invest because it includes higher amount of risk, at the same time high amount of funds which need to be invested also. So here fewer investors are included, and it requires large sum of money. Hedge funds use complex strategies and aggressive investment in all kind of derivative across the market. So here the different types what they use, they may invest in any kind of derivatives, and the number of complex strategies which are used which will be difficult for the general public, and the people who are the institutions who are going to invest under, or the companies who are going to invest under hedge funds, they their aim is to generate higher returns and do better than the returns what they generated by the market. And the risk involved in investing in hedge funds is also high, and the hedge funds are also active speculators as well. So here the level of risk is too high. Hedge funds can either be open-ended or close-ended. Both the options are available here. And hedge funds are not regulated like mutual funds. The regulating is the regulatory uh, process is also different from mutual funds. However, the various changes are happening in the financial market and the hedge funds are soon regulated. Okay. So moving further with the different types or sorry, different characteristics of hedge funds. Here, basically, we have four types of features. So, on the basis of structure, if you think about hedge fund structure, hedge funds can be limited partnership or corporations, and hedge funds is uh, a complex procedure, so it is basically not preferred by the general public. Thinking about fee structure, the fees charged by hedge funds managers and the performance fees and the management fees, what they're going to charge is also based on the percentage. So here, the fees, what is charged by the uh, hedge funds manager, that will be calculated on the basis of percentage of funds net asset value, and the performance fund, the management fund is based on the percentage of uh, net asset value, whereas the performance fees depends upon the profit which is made by the fund, and that can be the percentage can be between from 100 to 50% of the profit. So in between 100 to 50 any percentage they can charge as performance fees. Then discussing about minimum investment and limited number of investors, as I already told, here the large amount of money is required, so general public for general public it is quite difficult to invest under hedge funds. So here huge amount of money is also required. So the number of investors is also less, and the investment made in hedge funds, that is also minimum comparing to other investments. Then the next feature is flexibility in investment strategies and products. Hedge funds uh, face more flexibility in investment, and they invest in variety of financial products and commodity derivatives also. So they also invest in swap and products which are not traded on the exchange, and here there are number of options available, and they use different investment strategies to earn higher profits. So these are some of the characteristics of hedge funds. If you discuss about types of hedge funds, there are number of types available. As I told, they invest in derivatives, they invest in commodities, they invest in swaps, and many more options using different complex investment strategies also they follow. So there are number of options available for them. Moving further, hedge fund support, there are two different parties involved. One is prime broker and second one is hedge funds administrator. Let us discuss about prime broker. Prime broker is responsible for trade clearing. So uh, he also provides the short-term fundings, and they also lend the securities, and they are also like custodian of the securities of hedge funds. So these are the main responsibility of prime broker, who is responsible for trade clearing, at the same time who provides the short term funding and also acts like an custodian. The another hedge fund support is hedge fund administrator. So hedge fund administrator, uh, they will provide the support to hedge the funds in their trades. So they also help in calculating what is the net asset value. So depending upon that investment you can do, and at the same time they involve in servicing the investors in the hedge funds. So they're totally trying to help, and they provide the assistance to the investors. So this is all about hedge fund support. Thank you.